Sorry, you can't have more. That is what Alhaji Aliko Dangote has told the Nigerian National Petroleum Company, NNPC. Aliko Dangote has rejected NNPC's request to increase its stake in the Dangote Petroleum Refinery. But why the refusal now, since NNPC is already a shareholder? Let's rewind quickly. Back in 2021, NNPC signed a deal to acquire 20% stake in Dangote Refinery for $2.76 billion. NNPC paid $1 billion with understanding for the balance to be paid by discounts on future crude oil supplies to the refinery. Because NNPC was unable to fulfill its remaining financial obligations before June 2024, its stake was proportionally reduced to 7.25% to reflect the $1 billion that was actually paid. That was NNPC's golden window, a chance to own 20% of Africa's largest single-train refinery, but NNPC didn't take it. Fast forward to today, NNPC wants back in. They've approached Dangote, asking to increase their stake by taking up additional 12.75%, and Dangote has said no. Speaking in an interview with the CEO of Norway's Sovereign Wealth Fund, Dangote was direct. He said, the national oil company already owns 7.25% and they are trying to buy more. We are the ones that have said no. We want to now spread it and have everybody be part of it. Typical of Dangote, that word everybody is the key. Dangote revealed that the refinery is planning an IPO, which is an initial public offering, which would list the refinery on the stock exchange and open ownership to many Nigerians, institutional investors, and broader public. His position is clear. Rather than concentrating more equity in a single institution like NNPC, he wants wider, more democratic ownership of these national assets. The irony, NNPC had its chance and passed it on. Now that the refinery is thriving, they want back in and the door is shutting. So what exactly would investors be buying into? The numbers are staggering. The refinery is currently operating at 661,000 barrels per day. That's actually above its nameplate capacity of 650,000 barrels per day. Let that sink in. In the first quarter of 2026 alone, data from NMDPRA, the midstream and downstream regulator, suggests that the refinery supplied about 3.18 billion liters of petrol domestically, about a 50% jump from the same period last year. Meanwhile, Nigeria's petrol imports collapsed by almost 60% over the same period. This is a refinery that is genuinely reshaping Nigeria's energy landscape. But Dangote isn't stopping there. He has announced plans to double the refinery's capacity to 1.4 million barrels per day within the next 30 months. That would make this facility one of the largest refineries on the planet before Jamnagar. And for future investors, there's another sweetener. Dangote has promised dollar-denominated dividend, stating that with 80% of the group's revenue expected to come from exports, investors can expect return in foreign currency. In a country where naira volatility has historically scared off investors, that is a bold and significant commitment. In closing, the bigger picture here is this. Dangote Refinery is no longer just an industrial project. It is becoming a public wealth opportunity. And by rejecting NNPC's request, Dangote is signaling that this opportunity belongs not to one government institution alone, but to the entire Nigerian people. NNPC had the option to own 20% of these assets. They passed it on. This opportunity is now open to everyone. The IPO date hasn't been announced, but when it comes, this could be one of the most consequential stock market listings in Nigerian history. Like, subscribe, and hit the bell button for more energy updates when they drop. I am Babatunde, and I'll see you in the next one. Thank you.